Why is it that lenders require you to turn in every page of a bank statement and will not allow you to redact any transactions? We're going to get into that today. But first, if you have any questions on getting a mortgage loan or purchasing a home, please subscribe to my channel and check out my other content. Okay, we've all been there, right? You're now under contract to buy a home, which is the culmination of one portion of the journey. But then you get into your loan and they're trying to prepare you for underwriting and they're asking for bank statements. And it can be highly frustrating because you may need to turn in 1 month or 2 months or 3 months, but they're going to want every single page of the bank statement to include every single line item during that particular month, the beginning balance, the final balance. It has to show the account number, the institution name, and then whatever accounts that you're using to show assets, you have to turn this in for each of those accounts. And a lot of borrowers can get really frustrated by this requirement. And the reason I decided to do this particular video is I had a borrower getting really frustrated by this, and they turned in 1 page of a 4-page bank statement, and they decided to redact every single line item except showing the earnest money going out. We explained that this is just not good enough. There's no lender in the world that can possibly accept 1 page of a 4-page bank statement where everything inside of it is redacted except for 1 line item. And I got this borrower on the phone and I've explained why it is that lenders do it this way, and I thought it would make a great video. So here we go. The important thing to know is it's about verification of the money that is in the account, where it came from, what it's being used for. It's not necessarily about going through each individual line item, each individual expense and casting judgments based on that. And a lot of these guidelines about, how many bank statements you need to turn in, the information it has to show, came as a result of anti-money laundering. Like there's the government trying to figure out how to prevent these criminal entities from laundering money through ordinary seeming bank accounts. So when you do turn in a bank statement to a lender, the very first thing they're looking for is the beginning balance and the ending balance. So number one, to make sure that there's no significant overdrafts, there's no significant changes in whatever that balance is. And number two, do you have enough funds there at the end of the month to get you through the transaction? And how much that has to be, really depends on your transaction. If you're a VA borrower with no down payment, and let's say you're getting $5,000 of seller incentives, then maybe you only need $1,500 to get through the transaction. If you're a conventional buyer and you've got your closing costs plus a $20,000 down payment, then that's how much you're going to need to show there. Another item they'll be looking for is large deposits, which is why I always tell folks, if you're looking to buy a home, in the 60 to 90 days before things get serious, try your best to avoid any large deposits. And if there has to be one, then make sure it's something that can be explained. What lenders don't like is when large sums of money, let's just say $20,000, magically shows up in your account. There's no explanation for how it got there. You can't provide the name of the sender and why it's there and all that. That gives lenders the willy-nillys, because when they're looking at assets and income, part of it is okay, yeah, it's there, but the other part of it is this sustainable, right? So if you just have $20,000 just magically came there, it could be from anything, right? You could be a drug runner for all that lender knows. And of course, that is not money that you can use in a real estate transaction. So if you can, avoid any large deposits, but if you have to have one, just be able to adequately explain where it came from. Like if it's a gift from a family member, that's something we see all the time. No big deal. We'll just have to put it in a letter of explanation and probably collect a bank statement from that relative showing that money outbound to your account. Now, with the person I referenced earlier, they turned in 1 page of a bank statement with 95% of the information redacted. Now, if I were to give you that and you were, attempting to loan me $400,000, you would probably find that a little bit suspicious. What is this person trying to hide? Why are they being so difficult about it? And I don't know if it's just misinformation on this person's part or what have you, but it was a bit of a process to get the actual bank statements from this individual so that we could get through underwriting and close their loan. So in culmination, when the lender is asking for the full and complete unredacted bank statements. It's not them being difficult. It's them following guidelines for each individual loan program. And hopefully, if they were to sell your loan on the secondary market to the investors, then they have to meet those guidelines as well. It's about verifying what money you have, sourcing it, making sure it's legitimate and repeatable, and also ensuring that there's no massive deposits that cannot be explained, and you're not ending each month with a negative balance in your account. If you have any questions on why lenders ask for bank statements or how you can make an easier process on yourself, please reach out. We'll set up a phone consult.